Visa or Mastercard or any other payment scheme, card scheme, ultimately the same device can be utilized provided you participate in the respective commercial arrangements, right? So that is in some sense interoperability from a device perspective. So make the device, make the service independent of the device. And similarly, if you look at the mobile money and mobile payments kind of a concept at this point, you also start seeing standardization of the QR codes. You're also seeing standardization in terms of the way the app interacts with the system and the way the QR code is interpreted. All of that is becoming pretty standardized in many countries which are moving towards interoperability. Then is the within the system interoperability that where a particular payment service provider is able to bring together different payment service providers and they all connect to one common system. Then you have interoperability within that particular system. Now, if in a country, if everybody joins one system, then I think, yes, there you have interoperability. But in many cases, that doesn't happen. And there are multiple such systems which come in. And then you have to be able to figure out how do you enable customers belonging to one ecosystem being able to transact with customers belonging to another ecosystem. And there are different arrangements which are possible. One is an interlinkage, where you interlink the systems and somehow exchange the messages and handle the clearing and settlement. You could have one central system to which everybody connects. Then you can have a cross membership, which is basically about that one institution participates in multiple schemes or multiple systems. And in that way, you are able to bridge between the different systems. And this is very similar to what you have in correspondent banking for cross-border payments, where you have correspondent banks, which basically bridging the national boundaries and jurisdictions for cross-border payments. The other angle is also to look at aggregators. And this is very, very clear when you look at it from the perspective of acquiring and look at it from the perspective of a merchant. So if a merchant is going to be accepting payments, there are different types of different payment services, different systems, customers who are going to be using merchant services. Then the merchant has to have ability to connect to the different systems or to payment service providers who are participating in different systems. So if there's one payment service provider who can connect the merchant to different systems, then that, of course, would be an ideal situation. But in some cases, that is not possible. So there are entities who come in between, who provide the service to the merchant, and who come in between the merchant and the acquirer. And the similar concept can come in where an aggregator can come in between. The aggregator can act as a merchant, like a biller. So if you want to pay somebody in the other system, you are essentially paying the aggregator who then transfers that to the other system. So now all of this are different ways of connecting different systems, but then we are still talking within the same payment instrument. So we are talking about still within either a credit transfer or within card or within mobile money, mobile payments, and so on. But then we might need to start thinking about interoperability beyond that, to talk about interoperability from the perspective of a person being able to use his bank account and do a credit transfer to an account which is denominated in the CBDC variant of the national currency, and vice versa. And being able to use to access the CBDC account both from a card as well as a mobile banking application and through any other channel, channel and payment device the particular payment service provider is able to offer. So then the question is, would CBDC then have to become embedded in the different systems which are already there in the country? And that is a question which needs to get answered. Now, interoperability as a term could mean different things in different contexts. And I'm just trying to show the different flavors. So if you look at it from a perspective of the government making payment transfers, from their perspective, the interoperability could be, how can I enable the beneficiary to have an account at whichever institution they want to, rather than them having an account with an entity the government is choosing, right? So very often the government benefit transfer programs, the government chooses one particular payment service provider, and then everybody has to have an account there or has to go to the location of the payment service provider to collect the benefits. And similarly for tax payments and things like that. But if you look at it from the interoperability, from the government's perspective, they would really want that the individual should be, a beneficiary should be able to bank with whichever bank they prefer, and should be able to make payments to the government from whichever payment service provider or bank they choose to offer. When you come to say the fast payments developments, and then here interoperability would be like, can you really bridge the banking customers with the customers of non-bank providers, or are you able to allow transfers between bank accounts and accounts provided by non-bank service providers? So that could be one way to conceptually to look at it. When you come to some of the new acceptance technologies, like QR code, does the merchant need to have one QR code or multiple QR codes depending on how many payment service providers they're tying up with? And also depending on whether they are going to accept cards or they're going to accept mobile payment solutions offered by non-banks. Can they use the same QR code? Do they have to use different QR codes? I think there are different dimensions which come up. Then when you come to open banking, here interoperability could mean things like, am I able to use one app to access multiple payment accounts which I have with different providers, right? So that could be interoperability from open banking perspective. And when it comes to central bank digital currency, I think we have to really define what we mean interoperability in this context. And here, one way to look at it could be to say it is allowing the public to use different forms of money interchangeably and enabling easy flow of funds between different systems, right? And then I will talk a little bit about this in some of the scenarios which I will lay out. So now moving to pulling away a little bit from the retail payments discussion. Now we also need to look at how does CBDC fit within the overall national payment system. The overall national payment system consists of different systems. It consists of both systems which are used for wholesale payments, which are used for supporting the functioning of the financial markets, capital markets, money markets, and so on. And these has different users, individuals, businesses, and the government. And there are potential different systems involved. And CBDC is going to fit into this national payment system, and it has very important linkages which other systems which will have to be developed. So, for example, if you look at it from a typical retail payments perspective, you have the retail clearing systems have payment service providers who offer payment instruments and operate schemes, which the government, business, and individuals use. And the retail payment systems, at the end of the day, will be settled at an RTGS system. Now, when you have a retail CBDC which is being introduced, again, you have payment service providers depending on the model you choose, which tiering you use. It could also be used directly if that's the design choice in the country. And this needs to, the payment service providers who are involved in this, if they interact with other retail payment systems in the country, they will need to be able to settle amongst them. And then also importantly, if you use a tiering model where the payment service provider has to purchase CBDC, so to say, and then distribute it to the customers, then the payment service provider has to have a means to be able to purchase. So they need to be able to interface with the central bank RTGS system or other system operated with the central bank. They need to be able to do this on the fly if needed. If there's significant demand for CBDC, they might have to do that on the fly, and they might also need to be able to do this in the course of settlement with a customer with the payment service provider who might not be dealing with CBDC. They want to receive the regular regular currency of the country in the regular account they have with the central bank, right? So there are interfaces which need to be built. So this diagram doesn't show the interfaces, but we'll have to very quickly populate that as we think about rolling out CBDC in the country. And here it is also important to take into note that many of the central banks which have been experimenting with CBDC and piloting them, and some who have launched, have always talked about CBDC being another payment service, another payment instrument, though a unique one, potentially a unique one with far wider reach in a country. So it is not the only payment instrument which will be existing in the country. So, so with that preamble, let me now start looking at what does interoperability in the CBDC context mean from different perspectives, from the end user perspective. What are the implications of that for the CBDC platform, and what are the implications of that for the other systems in the other payment systems in the country? So I think one point for the end user is, will they be able to move money across CBDC wallet, if that's the the user interface for them, to their e-money account and bank accounts which they own themselves, and to potentially to other third parties, right? So are they able to do that? So or are they only able to transact in CBDC with other customers who have access to CBDC? So I think that is an important point from end user, and that has important implications in terms of how it will work. And so here the question is across different institutions, and then also, are they able to use the third-party apps which they are used to in countries which already have open banking, in particular the third-party payment initiation services which have been offered? Are they able to use the third-party apps to be able to access their CBDC account they maintain with a particular payment service provider if the tiering model is used, or with the central bank if that's the model chosen in a given country? So I think from a user interface perspective, but also in terms of with who else they can transact, I think that is a big consideration. Then when you look at also the point about are they able to transfer and pay to anyone irrespective of whether they use CBDC or not. So it is one thing to say that if I have CBDC access to CBDC, I can transact with customers, any other customer, with respect to whichever payment service provider, provided they have a CBDC account. But that might be restricted in certain contexts. So then the question is, are you able to transfer and pay to anyone, irrespective of whether they use CBDC or not, even when there's no connectivity? We are talking about offline here. Okay, what about across borders? That doesn't mean that the CBDC itself is the payment means used, is a settlement mechanism, settlement asset rather, for the cross-border transaction. There could be intermediaries who come in, like the way currently you do a cross-border payment. You are able to access service providers who will collect the local currency from you, and then they will make the transfer in the foreign currency to your counterpart. With entities like that can come in into a CBDC ecosystem where you are able to use your CBDC account to make a foreign payment, to cross-border payment, without necessarily the other recipient getting that CBDC, right? Then what about a split tender? So split tender is like when you typically go to a merchant location, you can pay part in cash, part in card, depending on whether it is allowed in that particular context or not, or whether you have multiple you're going along with friends to a restaurant, you want to split the bill. Are you able to then split it across the different payment needs your friends have? So I think will that be feasible with the CBDC? Then what about access to different transaction channels? Internet banking, mobile banking, third-party applications, QR code, other payment devices. To some extent, this is could be dependent on the payment service provider. So they might offer all the different options and embed CBDC within all of them, or in some cases they might only be doing it through one particular transaction channel. And what is the user experience associated with that? Will they feel comfortable with being able to access CBDC only through a particular transaction channel? Though one can argue that in today's world, everything is converging on the mobile. So in that sense, maybe it is straightforward, but then it's a question of maybe which apps you use, which matters. And so this is from the end user perspective. So I'm listing some common scenarios here, right? Then when you look at it from the CBDC platform, what are the implications of this to the CBDC platform? And I think ultimately the design of the CBDC platform has to meet the needs which the end users are expressing. And so this requires a good understanding from whoever is designing the CBDC and implementing it. They need to really understand how the users will behave and what the users would want. And assuming that you want to do much of almost all of what I mentioned on the left-hand side, then what are the implications of this to the CBDC platform? You might need to have different types of participants, both banks and non-bank payment service providers. You might need to distinguish between different roles here, between issuer, acquirer, third-party provider. Because they might provide different functionality. As I mentioned earlier in my presentation, when I talk about the different levels of interoperability, I talked about the role of an acquirer who could actually help bridge different systems by offering services and connecting to acting as an intermediary, connecting to different systems. So so there needs to be a role like that, which is feasible also in the CBDC platform. And then also third-party providers. What about billers? Bill payment is typically often very different from the way you do a merchant payment. Though conceptually it is still a payment, but then there are different dynamics. There are different transaction flows potentially there. When you look at things like bill presentment and so on. So what about billers? Do you need to recognize a different role in the CBDC platform for that? And then integration with other payment systems, which might have differences in clearing and settlement processes, like card and mobile payments, as I was mentioning. If in particular, if CBDC is going to be accessed by a customer through a card, then would CBDC with the card payment system in the country support transactions being done through that, and will it be seamless to the customer, to the merchant, to the other counterparties? And then what about through an automated clearinghouse if you want to use credit transfers and so on, and fast payment system? And then importantly, the RTGS, and which I talked about earlier, in terms of the important linkages for the payment service provider to be able to move in and out money from their main account to a CBDC account, so that they can distribute CBDC back to their customers, if that is the tiering model chosen in the country. And irrespective, in terms of settlement across different systems, you might still want to use the RTGS. So I think there are implications on the CBDC platform. Then if you look at the other systems which could be impacted if interoperability is to be achieved when CBDC is introduced. One is to look at what about the liquidity arrangements. The payment service providers will need to rebalance against their regular balances and CBDC holdings almost instantly. And then one also needs to think about what happens outside banking hours. So if the RTGS is down, the RTGS is closed because of banking holidays, then if the PSP needs more access to more CBDC because their customer has now received CBDC and they need to be able to account for that, or there's more customers who want access to CBDC, what will the PSP do, right? So they will need to be able to move money from their main account with the central bank to purchase CBDC and then be able to distribute that. So there's that dimension which needs to be looked at. Then what if the bank or PSP doesn't have enough liquidity at this point, and they might need access to collateralized line of credit from the RTGS system, or from potentially other payment service providers in the country who might be willing to give some kind of a credit to the institution based on of course collateral to safeguard against the credit risk here. So I think what are the implications of that in terms of integration of the CBDC platform with that? Then similarly on a settlement perspective, how do you settle an obligation in regular currency with central bank digital currency, and vice versa? So if you have different systems being involved, different payment service providers, you could run up balances in different between regular currency and the CBDC. So are you able to kind of set off this in a seamless manner? Conceptually, you should be able to do, because of the legal definition of CBDC. It is a form of the regular currency, so you should be able to do that, and the system has to enable that, right? So I think so that is the point I'm trying to make here. So you have on the one side you have the end user expectations that has implications for the CBDC platform, and then that has implications again on the other systems in the country in terms of what services they will offer. It doesn't necessarily be changes in the system, but the overall consumption of the rollout of CBDC from the interoperability perspective might need to take that into account. So I will now talk a little bit about some of the scenarios I mentioned. I'll talk about 4 scenarios, and I will use the two famous counterparts always used for payment transactions, Alice and Bob, and they are also very commonly used for anything on cryptography. So let's stick with Alice and Bob. So this scenario is about transacting in CBDC to CBDC. So here, and we are talking about the fast payment system in the country being the kind of clearing and settlement and the payment system associated with transactions on CBDC. So I think it's a pretty straightforward flow. Alice makes a payment. It comes to the payment service provider servicing Alice. Then it goes to the fast payment system. It instantly sends it to the payment service provider servicing Bob. Bob receives the money, and they settle at the CBDC settlement system, or basically could be the RTGS system in the country. And this is a pretty standard flow within any payment system. Kind of the once in dashes are the information, and the ones in hard kind of bold line are basically the transfer funds. Now, how will this change if you introduce the complexity of bringing in where the Alice Alice is going to use her CBDC account, whereas Bob is going to have a regular bank account, right? So in this case, you might now, and then if you might need to bring in now 2 different systems over here. One is the CBDC system, which is serving as a payment infrastructure, and then you have the fast payment system through which Bob's payment service provider is connected. So you will now need to link the 2 systems, and you might need to be able to swap the balances of payment service provider A who wants to pay to the payment service provider B. They might kind of basically pay to the system in CBDC, and the system has to then be able to interface with the fast payment system to basically pay the payment service provider B in regular currency. So you need to bring in this dimension here now. When you look at on the one side CBDC and on the other side a bank account. And now, what if you bring in the concept of the provider who is servicing Alice is not connected to the systems on which Bob's payment service provider is connected. And this could also be in the context of a cross-currency transaction, and not necessarily cross-border, but could be within between the same country, where some countries do have multiple currencies supported. Or you can also conceptually look at it as from the perspective of transaction flows. You could consider like currency X being representing CBDC and currency Y representing, say, a CBDC. So in this kind of scenario, you have to have a third party coming in who is represented as basically a local participant A. And the local participant has to be, is the one who interfaces with Alice's payment service provider, is sending instructions to the fast payment system on which the local payment service provider is connected. And that particular system is going to do now what was done in the previous scenario, to be able to exchange with the CBDC settlement system and make it easy. And basically, the fast payment system is going to be interfacing with the payment service provider B, servicing Bob, and it's ultimately is going to get settled in the central bank digital currency. So Alice is having a regular account, is not the payment service provider is not participating in the systems. She's able to still transfer to Bob from her regular bank account into a CBDC because there's a third party provider who exists who can serve as a bridge. So this is the third scenario. And I will talk about a fourth scenario where you bring in, you kind of don't have a local participant. You have Alice's payment service provider connected to the CBDC system. So Alice is using her CBDC account and is able to make a transaction to Bob by the CBDC system connecting onto the fast payment system, and in some sense doing some kind of a swap arrangement between the CBDC system and in the fast payment system. So basically, what I'm trying to show here is there are different ways of achieving. If you look at scenario 3 and 4, in a way, it is pretty much the similar concept, but you can achieve it in different ways by having a third-party provider coming in between, or you can have the system-to-system interface built, and this could potentially also be cross-border. You could also consider it to be cross-border, where the fast payment system is actually in a different jurisdiction, and you could conceptually think of how you could connect these two. So with this, let me stop the presentation, and I would now request the organizers to put some of the poll questions which I had to gauge the views of the participants, and I'll be happy to answer any questions you have. So feel free to now go ahead and start putting questions in the chat, and we have this first question coming up. So please do kind of use the time to pick which one you want to choose. Okay, so I guess we can end the poll now, and as you can see here, there's quite a bit of different scenarios here. Nobody chose bill payments, which is interesting. I can see some choosing now. So here, what it really shows is that there are different payment needs here, right? So e-commerce payments. I think there's a question in the chat whether we can see the poll results. Lijian and Alan, are you able to show that to the participants?
Hi, Harish. We're waiting for a few more responses before we stop the poll and share the results.
Okay, so I don't know whether everybody's able to see it now. So here, what you're seeing is kind of a rough split, equal interest for domestic person-to-person remittances, in-store merchant payments, and then e-commerce payments and payment of government dues. Almost like roughly the same. A few for bill payments. One way to interpret this is to say that different people might have different needs when they're looking at using CBDC. So I think the design has to cater to all of this, right? And each one has some different implications. When you have domestic person-to-person transfers, there are different dynamics which come in from an e-commerce payment. So let me now request the second poll question, which will talk more about the device. Lijian, if you can please post the second poll question.
Yep, so they are all polled. So you can just scroll and then you'll see the results for the second and third question.
Okay. Alan, I'm not sure whether you're able to post the second question. Let me see. Okay, so we have the second also here. Okay, on the second one, okay, so I can see it here now. So on the second one, we had the question about which payment device would you be choosing, and here, what we're seeing here is an overwhelming majority is actually mobile app, and then you have a little bit of contactless chip card, some internet banking, some NFC tags, and a little bit of chip card. So I think this is clearly indicating as one would expect, that mobile app would be likely to be the most commonly used payment device to access CBDC. Then the last poll question from my side was on what will be the topmost challenge with respect to interoperability. And here I had posed a question of basically the different technology stack and legacy payment systems, divergence in clearing and settlement, differences in messaging formats, mismatches in rules and procedures, and lack of business case to invest in integration. And as one would expect, the technology stack is coming out on the tops here. Of course, there are divergences in clearing and settlement mechanisms. But what I think we are underestimating is the lack of business case to invest in integration. I think that's an important element. Perhaps we are underestimating that. Interoperability is not just about the technical infrastructure, interconnectivity, but also the business rules behind it, and then also the commercial model behind it. And I think we should not underestimate that. So it was interesting to see the different poll responses, and I hope the participants were able to appreciate better some of the discussions we were having. So now there are a few questions. One of them is, why is the focus on the customer, consumer? Surely business will use CBDC first. I think this really depends. Firstly, when you say business will use it first, do you mean for business to business payments, which are typically of larger value, and they are also typically integrated more into their existing accounting systems and so on. So there are specific issues which come there. Then when you look at consumers, from the consumers, it is likely that the very first payment use case, like for many payment services, has been about being able to transfer from one person to the other person, so remittances, which also came out in the poll as a significant use case. But then consumers being able to pay to merchants to be able to transact is also going to be an important one. So that's the reason why I was showing more from the consumer side. But there are clear business-to-business implications also for interoperability, particularly with respect to being able to share the data, which is underpinning the commercial transaction. So there are integrations with the ERP systems they have, the financial accounting systems they have. They could be for larger amounts, and there could also be different payment terms which are associated. So I think there are some complications there. So I would not say that the businesses would be the first to use. So I think it is likely to be, by definition, when you introduce a retail CBDC, you want it to be used for general commercial, general interactions, and consumers are an important part of that. Alan, are there any other important questions to bring up?
Yeah, so I guess there were some questions in the Q&A. Do you have examples of mobile switch using blockchain in order to instant payment?
There is, Alan, is there a question there which we were talking about? When there's a question from Alan King about run-on currencies into CBDC and vice versa. See, that possibility, that is a risk which many be able to move money across easily, and CBDC adds to the mix here. Of course, there's a different liability. CBDC is a liability of the central bank, so there's a different degree of safety potentially, which customers would see. So that is a risk which is to be looked at. But I think what is also important here is that for people to have confidence in CBDC, one should be able to easily move into and out of a CBDC. You could put restrictions into the quantity of CBDC, but if you want to move within that quantity limit, you should be able to move in and out smoothly for you to have confidence in it, right? So I think that's the point I was trying to make as part of the interoperability.
Harish, there are some questions in the Q&A. Are you able to see it?
Okay, so I was looking at the wrong panel. Looks like there are a number of questions here. There is this question about mobile switch using blockchain in order to ensure instant payments. So this is one aspect which I didn't touch upon in my presentation, and which is about the CBDC could be issued as on an account-based kind of a framework, or it could also use a token-based framework. And the interoperability could have different implications and different meanings in this context. Now, if the question is about using mobile switch using blockchain in order to ensure instant payments, is there any examples? There are some examples. I think notably there's a service in Cambodia currently, which uses a blockchain arrangement based on kind of for offering fast payment services, and I think they're also one of the challenge winners. There are also a few others which are coming up. Then there's a question related to the design of open banking protocols be different with CBDC than its other currencies. No, I don't think so. Fundamentally, I don't think there will be a difference. But then there could be implications related to kind of if there are restrictions on who can hold and transact, who can hold CBDC, kind of which institutions are allowed to hold CBDC. Then all the third-party initiation services, they might be able to work with all the bank accounts and all the money accounts, but they might not necessarily be able to work with, they might not be able to offer the same services with CBDC because some of the participants might not be there. So I think that could be different, but otherwise fundamentally it should really be the same. There's another question related to, with so many CBDC, so many payment systems, can CBDC be cost effective vis-a-vis others? And can it be democratized easily with so many potential rural users? I think this is an important angle, an important dimension to consider, in particular from a public policy perspective. And I think CBDC will have a particular obligation for it to be widely accessible across the country, across different user contexts. So I think it is possible, and this will be the also the kind of motivation for many central banks, and this will also be some kind of an impetus to them and the government authorities. If you are looking at introducing CBDC, you have to look into the different user context and then the different being accessible across the country, across different customer segments for the most basic needs. And here one also needs to potentially add the issue of availability when there is no electricity and things like that, right? So I think it is possible that because of this kind of obligation for universal access, CBDC could become a system which is widely accessible, but it still will have to interface with the other systems. Then I think there's a question related to CBDC in a cross-border kind of a scenario. So there are a lot of discussion going on at this point related to at the global level on how CBDC can be used for cross-border payments. In fact, the Monetary Authority of Singapore, along with other central banks, came out with a good paper a few years back on different ways it could be done. And as I was mentioning in my presentation, one scenario could be to simply use the existing providers of cross-border payments and plug them onto the CBDC ecosystem. So that way you use CBDC for your domestic transactions, and you can also use it for making a cross-border payments. But in the background, you're using the traditional infrastructure, which is always used for cross-border payments. So that is one way. But if you want to use CBDC on both ends and being able to transact, there are different kind of issues which come up, and there are different technology interfaces which might need to be built. And these are currently being explored, and there are a lot of pilots going on, including in the Southeast Asia region. But at this point, no services are being offered which use CBDC for cross-border payments, kind of where CBDC is on both sides. in fact, all the CBDCs offered today, which are live, the two which are live, are only for domestic use at this point. Now, there's another question related to why is CBDC posed as a solution to banking the unbanked. I think here one really has to one has to think hard on this. There is this implication of a government or a central bank coming in with CBDC, that the level of tolerance which a central bank or a public authority can have for exclusion of individuals is going to be very difficult for them if you have segments of the customers who cannot. So the society who cannot use a CBDC. So I think a CBDC will have to take into account the financial inclusion challenges in the country, and in some cases it can really be the motivating factor to kind of make things move and make changes happen in the country to address some of the underlying challenges related to financial inclusion, right? So the fundamental issues for financial inclusion will remain the same, whether it is you are trying to meet them using e-money, bank accounts, and so on. And that is going to remain with CBDC. But what the difference really here could be that there are different actors now coming in. There are different business models which are possible with CBDC, which could make it perhaps more easier to address this challenge. But fundamentally, the issues remain the same, and those issues will have to be considered in the CBDC design. Now, there is also there is some question related to kind of reserve currency and the US to China and so on. See, those are all issues which are under research at this point, and kind of this is very difficult to address in this kind of a forum. And at this point, I would not answer that question, given that it is still under significant research. Then I'll take the last question in the interest of time, so that we can conclude. What sort of CBDC capabilities are needed to reduce or possibly increase cost of AML and financial crimes? So I think here really, from an AML safety perspective, I think there are a number of different levels and issues which come into play. So to begin with, I think is about when the parties who are transacting and who are introduced into the system, are they following the right level of AML safety controls, right? So I think that's the very first point. So I think a CBDC system will have to ensure that the entities coming into the system who are transacting are fully vetted, are complying with the AML safety norms, and then they follow the same procedures for enrolling customers like what you would expect for a traditional account. So I think that is one point. Then in terms of transactions which are happening, since if CBDC helps bringing in greater usage of digital payments in the country, then more transactions become digital, it becomes more traceable, and it's more easily available. And that could also help in addressing some of the AML safety concerns, right? So I think the fundamental point is about the same AML safety norms which you typically would follow for a regular bank account or an e-money account. You will need to perhaps follow for this as well. I think that is a fundamental point which needs to be looked at. There's some questions related to whether you will see digital currency areas, and whether basically, I think the question is about CBDC being used in the context of a regional trade, presumably. I think that's what is the question. And the competition of CBDC versus crypto assets. So you see, I think here one needs to assume at a fundamental level that people who are using crypto assets for reasons because it is more efficient would likely find the same level of efficiency possibly achieved using CBDC on the one hand, and then also on the other hand, some of the other new services which are coming in, like fast payment services, which are being introduced in countries which are actually quite kind of almost instantaneous in the domestic context. And if you're able to achieve that for a cross-border context, using intermediaries or interconnecting the different systems, you are then, the question is from an efficiency perspective, you're able to meet the same needs using a regular traditional payment mechanism. And then why would you then go for something which has risks associated with it? So I think that's the way to look at it from a public policy perspective, to look at the reasons why somebody has legitimate use for crypto assets because of the efficiency it offers, and whether you can achieve the same efficiencies by design in your existing traditional payment instruments. So with this, let me conclude here and maybe check with Alan whether he wants to give any concluding remarks. It was a good discussion. I hope I gave you a flavor of some of the considerations one has to look at when you look at CBDC from an interoperability perspective. Thank you.
Thank you very much, Harish. Appreciate the time. So once again, thank you everyone for joining today's session. We've come to the end of today's masterclass. We are going to break for today, but again, this is part of a continuing series as part of the Global CBDC Challenge. Next week's session will be focused around financial health and inclusion, and I understand there were some questions earlier on about CBDC and financial inclusion. So stay tuned. Next week, we'll attempt to answer some of these questions, or our guests from the UNDP as well as UNCDF will help us to address this topic next week. So with that, I thank you very much for your time, and have a good evening, good day to everyone on the call. Thank you. Bye-bye.